Welcome back. Investors looking for steady income and moderate growth often turn to ETFs that focus on dividend-paying U.S. companies. And one of the most widely discussed in this category is SCHD, the Schwab U.S. Dividend Equity ETF. As of November 11, 2025, SCHD is trading at $26.77, showing a modest intraday gain of 0.03 points, or roughly 0.11%. While the increase may seem small, it reflects a larger story of investor sentiment, fund flows, and institutional confidence in this ETF. Over the past few trading sessions, SCHD has experienced a net outflow of around $122 million, indicating that some investors are rebalancing portfolios, taking profits, or moving to more liquid positions. Despite this short-term outflow, analysts and institutional investors continue to show confidence in SCHD, reflecting its long-term appeal as a dividend-focused ETF. This video is for informational purposes only and is not financial advice. Always do your own research or consult a professional before making any investment decisions. SCHD is popular because it invests in U.S. companies with a proven track record of dividend payments. The ETF emphasizes stability and income, which makes it particularly attractive during periods of market volatility. On November 11th, the intraday high reached $26.79 and the low touched $26.52 with a trading volume of 19.39 million shares, signaling healthy liquidity and active participation from market players. Investors who prioritize income over aggressive growth often find SCHD an appealing choice because it combines solid dividend yield with the potential for moderate price appreciation. One of the most notable developments for SCHD in recent weeks has been the increase in institutional holdings. For example, Allworth Financial LP recently added more than 41,000 shares to their portfolio. Such moves are often interpreted as a sign of confidence from institutional investors who typically conduct thorough due diligence before committing capital. Analysts often point out that institutional buying tends to stabilize ETFs, especially those like SCHD that are dividend-focused. The fact that institutions are increasing their stakes, while some retail investors are reducing exposure, may indicate that long-term investors see value in SCHD, even amidst temporary market fluctuations. Wall Street analysts currently rate SCHD as a moderate buy, with an average price target of $30.46. This suggests a potential upside of nearly 14% from the current trading price. For dividend-focused investors, this represents a rare combination of income stability and modest growth potential. SCHD's portfolio is carefully curated, emphasizing companies with strong fundamentals, sustainable dividends, and a history of weathering economic downturns. Analysts also note that while the ETF is not likely to deliver explosive short-term returns, it provides a reliable source of passive income, which can be reinvested to enhance long-term growth through compounding. The dividend yield of SCHD currently stands at approximately 3.6%, making it one of the more attractive options among U.S. dividend ETFs. This yield is higher than many broad market ETFs and provides a consistent income stream, even during periods of market uncertainty. Dividend investors particularly value SCHD because the companies in its portfolio are financially stable, reducing the likelihood of dividend cuts. In contrast, ETFs that chase higher yields often take on companies with riskier balance sheets, which can be problematic during economic slowdowns. SCHD's focus on high-quality dividend payers strikes a balance between yield and safety, offering investors a low-volatility option for income generation. When comparing SCHD to other dividend ETFs, several points stand out. For example, VYM, Vanguard High Dividend Yield ETF, has a slightly broader portfolio but a lower yield of around 3.2%, while DGRO, iShares Core Dividend Growth ETF, focuses on dividend growth with a yield of approximately 2.7%. SCHD distinguishes itself by combining a solid dividend yield with careful stock selection, emphasizing companies that are not only reliable dividend payers but also positioned for moderate price appreciation. This makes SCHD attractive for investors seeking both income and stability without sacrificing quality. Institutional activity continues to influence SCHD's outlook. Analysts note that the recent increase in institutional holdings, coupled with the ETF's steady dividend payments, positions it as a safe haven for conservative investors during uncertain times. While short-term fund outflows may cause temporary dips, SCHD's underlying portfolio fundamentals remain strong. The ETF is diversified across sectors with a focus on companies that have a proven record of financial discipline and shareholder returns. This diversification helps mitigate risk and ensures that investors are not overly exposed to any single sector or company, making SCHD a resilient choice in a volatile market. Market experts often emphasize that SCHD's performance is tied to broader economic trends, particularly those affecting value and dividend-paying stocks. In times of economic uncertainty, such stocks often outperform high-growth but volatile counterparts. For example, companies with strong cash flows and consistent dividends tend to retain investor interest, even during recessions or market pullbacks. SCHD's portfolio is well-positioned to take advantage of such dynamics, which is why it continues to attract long-term investors. Analysts also highlight that, given the ETF's current price and dividend yield, investors have the opportunity to build a reliable income stream while maintaining exposure to the U.S. equity market. For investors considering SCHD, several strategies are recommended. First, a long-term investment horizon is essential, as the combination of dividends and moderate capital appreciation is most effective over multiple years. Second, reinvesting dividends can significantly enhance returns through compounding, turning a modest yield into a meaningful growth engine. Third, while SCHD is relatively low risk for an equity ETF, diversification within a broader portfolio is still advisable. By combining SCHD with other ETFs or asset classes, investors can manage risk while maximizing potential returns. Looking ahead, the outlook for SCHD remains generally positive. Analysts predict stable returns with moderate upside, largely due to the ETF's focus on high-quality, dividend-paying companies. While short-term market volatility and outflows can cause temporary price fluctuations, SCHD's fundamentals and institutional backing make it a reliable choice for conservative investors seeking both income and growth. Furthermore, in a market environment where interest rates and economic conditions remain uncertain, ETFs like SCHD offer relative stability, allowing investors to navigate turbulence without compromising income. In conclusion, SCHD continues to stand out as a well-managed, dividend-focused ETF that balances income, growth potential, and risk management. Its current price of $26.77 moderate intraday movement and strong institutional interest underscore its appeal to long-term investors. With a dividend yield of 3.6%, an average analyst target of $30.46, and a diversified portfolio of reliable U.S. companies, SCHD offers a compelling option for anyone looking to combine steady income with market exposure. While short-term fund flows may fluctuate, the ETF's fundamentals, sector diversification, and historical performance suggest that it remains a stable, attractive investment for both new and experienced investors. For those considering SCHD a long-term approach, careful monitoring of market conditions and reinvestment of dividends can provide a consistent and reliable investment experience. The combination of income stability, institutional confidence, and moderate growth potential makes SCHD a cornerstone for conservative portfolios in today's market environment. Thanks for watching. If you found this helpful, don't forget to like, subscribe, and hit the bell so you don't miss any updates. See you in the next video.